Do you guys know who this is? This man is stupid rich. I mean, filthy. Ray Dalio has a net worth of $17 billion. And yesterday, I discussed Citron research, Andrew Left's opinion on NIO. He's short the stock, but Ray Dalio is who you should actually pay attention to when it comes to NIO stock. Ray Dalio is the owner of Bridgewater Associates. Bridgewater Associates is the world's largest hedge fund, and now it owns NIO stock. That's some massive NIO information, so let's discuss this. You're going to want to know why Ray Dalio owns NIO and what that means for the stock. Let's do it. What's up, you guys? My name's Henry. If you're new, I was an analyst at Goldman Sachs in Los Angeles, California, and worked for 2 other hedge funds, including an options trading one on Wall Street. Before I jump in, I'd appreciate an early like, as that really does help out the channel and more people get to learn about NIO, so that's all I ask. Now, Ray Dalio is a titan and he's very special. I want to discuss his view on China because Ray Dalio says now is a special moment for China. He says global markets are shifting and China is an opportunity to basically get stupid rich, as US poses many struggles right now. This isn't just important information, but it's critical for NIO as a company, and will explain exactly why I'm bullish and have recommended the stock since they were in the low teens. Ray Dalio was quoted, "Investors across the world should diversify further into Chinese assets as it opens its capital markets and challenges the United States in areas ranging from trade to technology. The world is overweight in US and European assets relative to Chinese assets." That's what he had to say during a Hong Kong FinTech Week webinar. And that makes so much sense because Americans are not in the loop when it comes to investments overseas. Well, we're all used to what is in America, but we don't know what's going on in China and their technology. Only recently has NIO gained in popularity, and for good reason. Before I go into these reasons, I want to mention how much Bridgewater has in NIO stock, and they hold 856,000 shares worth $6 billion in NIO shares according to the SEC filing. Here is proof of that filing. As you can see here, he owns so much shares in NIO, and let's discuss why he owns so much. Ray Dalio owns NIO for a number of reasons, and I think the number one reason is strong brand perception. Guys like Ray Dalio and his top analysts that make decisions are very technical, but they also look at things such as moats. Warren Buffett made this term popular, and it's basically the advantages of a company. Well, I can assure you one reason, and I put up 2 fingers, I meant 1 finger, one reason that Bridgewater owns NIO is due to their strong brand in China as a luxury car manufacturer. Number 2, higher sales volume. It's interesting how Bridgewater owns NIO before NIO announced over 5,000 vehicle sales. It's like somehow they knew that NIO was gonna have a very strong month in October. And let me tell you, these guys have predictive software and ways to get their hands on information above somebody like Citron Research. So I pay way more attention to Bridgewater Associates rather than Citron Research. That's also why I tell people to be a long-term investor and don't get spooked by people like Andrew Left, because left is not right. Left is not right. Okay, I'm sorry for that joke. It wasn't good, but I had to do it. Ray Dalio recently explained why Chinese capitalism is on the rise and why American capitalism is in desperate need of a fix. To summarize, per capita income in China is growing near 6% per year, whereas United States, it's now under 2%, as you can see on the screen. So tell me, which market is going to have more money to afford a luxury vehicle over the next few years? Of course, the Chinese consumer. Chinese workers are busting their donkeys, where in America we have a growing number of people wanting a freebie handout and wanting less capitalism so they don't have to work as hard. And that's not a good thing for the economy or mindset of workers in general. So what Dalio was saying is that type of trend is what will benefit NIO, especially in China. Ray Dalio also said the interest rate differentials are favorable. The growth rate differentials are favorable. A big element is going to be order, internal order, and so far that's pretty favorable, as he said about China, adding that the country's handling the pandemic really, really well, and their strong ability to maintain an orderly society when compared to Western democracies is going to really benefit companies such as NIO. Dalio has a large following in China's business circles, and a significant portion of his investment portfolio is in China and that country as a whole. And honestly, I'm gonna start picking Chinese stocks over at Patreon because I think if you want more security and you want more growth and you want a better portfolio overall, you're gonna wanna look in China as opposed to the US-based companies, at least for a portion of your portfolio, because it makes sense both on a risk return basis and on a growth basis. With the Chinese electric vehicle market already the world's largest and now inflecting upwards after the recent downturn, NIO is well positioned to take a share in the premium segment. I don't really think it's a question if they will stay the fastest growing Chinese electric car maker in China or not. Left, who is not right, specifically took issue with NIO's new hatchback model, the ES6, a key mass market shift on NIO's end from niche luxury electric car vehicles to affordable utility cars. I mentioned this before in the last video here, but I have a new point to add. So I said previously, please tell me what is wrong with a more affordable car. Tesla came out with a Model 3 and killed it for the same reason that Left is saying that NIO is going to be having trouble. Give me a break. A more affordable car makes so much sense. Yes, people in China got money, but does that mean that everyone has money? No. That's like saying people in America were all stupid rich. And certainly that is true. There is some Americans that are rich, but statistically, there's a lot more people that are paycheck to paycheck than stupid rich, because it is not easy unless you're subscribed to this YouTube channel. When it comes to Bridgewater investing in NIO, the new point I want to mention is their long-term outlook. As a hedge fund, Bridgewater has a keen sense of long-term outlook since they are focused on the macro environment. They're more likely picking NIO because they know that the population of China is over 1.4 billion people, and that is a huge opportunity for NIO. Bridgewater isn't looking for a 5% return. They're swinging for the fences, and they picked NIO due to the market opportunity in a growing segment of the world, which is China, both economically with the population and because it's a favorable market since the Chinese consumer likes luxury vehicles and luxury goods for that matter. Tesla sales for the Model 3 sedan maintain its position as China's most solid EV model for multiple months now. The production volume was 22,929 vehicles, which is over 10,000 more than it had in September. And that would also suggest that Tesla Giga Shanghai is running at over 5,000 vehicles per week. And guess what? NIO should be able to double their vehicle capacity to 10,000 vehicles produced in the near future, since they have multiple advantages in the local economy as opposed to Tesla. But don't get me wrong, I think both manufacturers are gonna absolutely kill it. The main points I wanna drive is don't be influenced by aggressive short sellers like Andrew Left, and pay attention to the folks that know what they are doing, like Ray Dalio. I can't predict what will happen to NIO, but I made a financial model that gave me an estimated price of $45 per share. There's just too much demand for current producers, therefore everyone wins. Citron must not know that NIO is basically backed by the Chinese government, which is almost, let's face it, fail-proof because China is just such a strong economy. So most likely the stock reacted negatively because Citron does carry some weight behind it, but I'm making sure that our YouTube family is informed and making smart decisions and not emotional decisions. That's it for this video. Thanks for watching. I love you all, and leave me a like and a comment, and make sure you subscribe to the dopest YouTube channel, and I will see you friends in the next video. Be aggressive in learning, but be safe in investing. I'll see you soon.
No one ever sees me, I'm losing every battle. No one ever sees me, I'm losing every battle. No one ever sees me.